Welcome to the Multifamily Investor Nation podcast, sponsored by CoStar. And we want to welcome today Forrest Lennhoff to the podcast. He is going to be talking today about a 4-unit property we're going to call 19th Street. And Forrest, welcome to the podcast.
Hey, thanks for having me, Dan.
Well, Forrest, I want you to get us started before we dive into this 4-unit deal that you have, and talk a little bit with the listeners about your background and where you are right now as far as the investing space is concerned.
Yeah, so 19th Street is, it's the first property I've purchased. My background is in the trades. I'm an electrician by trade, and I've always been interested in the idea of, like buying a property that needs work and fixing it up because I'm capable of that, and like building the equity in it. I'm young, so like money is tight. Money's what restricts me to my investing. So it worked out perfectly to be able to house hack this property. I do owner occupy it. So I live in one out of the 4 units, and yeah, it's allowed me to purchase my first investment property. It's allowed me to give myself a place to live, and it's kind of launched me into my next property through the build and sweat equity that I did with this property.
I want you to dive in first and kind of talk to us about how you sourced and found this property.
So there's no secrets here. I found this property on Zillow. I saw that, at this point when I was searching for my first property, I was on Zillow multiple times a day, obsessively almost. And I saw it right when it popped up. I had been working with a realtor, and, I saw the property pop up. It was, perfect. It was exactly what I was looking for. It's a beautiful property. So, it also caught my eye on that front. But, I was the first one in. I was the first contact made to the seller. I was the first one in to see the property. I was the first one to make an offer.
So a lot of people, especially some of the listeners that I've listened to multiple podcasts, have heard other people say that kind of Zillow and, LoopNet, and those are kind of the places where a lot of deals go to die, right? So it's kind of like a lot of the trash deals. What would you say about that in regards to maybe this deal that you have?
I would say that they're wrong on that front. Maybe the very best deals never hit the open market. But I found a good deal here. As a house hack, it's perfect. I bought it with, it's 4 units. They're all 1-bedroom units. The numbers work on it. At the end of the day, say what you want, but the numbers work for me. I'm able to live for free, and I'm able to pay my mortgage, my taxes, my insurance with rental income, and have not an insignificant amount of money left over at the end of the day for any other updates, repairs, renovations, anything else that comes up.
So you found this property on Zillow, you reached out to the listing broker on it, listing agent, and at what point did you actually go and tour this property?
Like pretty much immediately. It was, the property is like 3 minutes from where I work. So I drove past it the next day after work, and I loved what I saw from the outside. All the work was inside for the most part. It had the newer siding, vinyl siding, vinyl replacement windows. It was built in 1900. It's got the big granite block foundation that was in great condition. It's the only, I think the other big thing that caught my eye about the property was it's the only 4-family in the neighborhood on the street. So it's the only 4-family in a street filled with 1, 2, and 3 family houses, and they're all owner occupied. So that right there added a lot of value to me.
How soon after touring the property did you submit your offer?
The next day. It's a smaller property, so I see a lot of, I've listened to a lot of your podcasts, and, people dealing with these large, these larger properties with so many units. Like, there's a lot more, back end work that you have to do to evaluate a property like that. But when it comes down to this, I'd done my homework. This wasn't the first property I'd looked at. I'd been preparing and reading and doing my research for, over a year prior, as I saved enough cash to be able to make a deal like this happen. And so, I knew what the rents were. Like, I'd gone through and I'd analyzed rents for different bedroom counts in Lowell, Massachusetts, where the property's located, and a couple of the other towns I'd been looking at. So, I was able to just kind of toss together some numbers of what I knew I could get for rent. And I was able to do a quick estimate of what my mortgage, taxes, and insurance would be. And, just on those two bits of information, I knew the property was good.
What kind of earnest money did you have to put down?
So I had to put $20,000 down on the property. The purchase price was $415,000. So it was quite a bit of down payment money. But basically, the owner had passed away, and the sale was being handled by the estate of the previous owner. And so I was dealing basically directly with, we were dealing with the seller's agent and an attorney. So it was a little tricky dealing with them. We got it done, but they had like a rider that was, had to be submitted with the offer. And it said basically that they could accept any other offer up until closing if it was higher. And if it was higher, they could accept that offer and give me a copy of what that offer was, showing proof, and I'd have 24 hours to counter that offer.
Wow. So that's interesting, because I actually have never heard that before, where they're basically saying, hey, we'll award you the deal, but if we find somebody else that wants to pay more, then we'll give you first right of refusal, but we may, bounce out of that. Now, were there any, contingencies in place where you were able to get paid back some of your fees for inspections or anything like that, or some of your time involved with it? Or was it basically just, if there's another higher offer, you just lose that money?
Nope. So, if there was another higher offer, I would have obviously received my deposit back, but there was no, they refused to negotiate on any sort of time into the deal, or any appraisal fees or anything like that. But, I had no choice, and I liked the deal. It was, the numbers made the most sense out of anything I'd looked at previously, and I just decided to go for it.
So was there anybody else that you were competing against when your offer was brought to the table?
Yeah, there was one other offer. It was never disclosed to me exactly what that offer was, but it was similar. I can only imagine that it was similar to mine. The one thing I did learn after closing was that the family had of the previous owner had hoped that it would go to somebody who was owner occupying. So I think that may have actually worked in my favor in this case, when in previous deals, previous offers that I'd made in this round of searching for a property, I'd lost to the cash investor as owner occupied. So I think in this case, it actually helped me.
Mm-hmm. And so you've, toured the property, you've submitted your LOI, you've got it accepted now. Obviously you have this rider on it that says that any other offer that comes could be, given to them. Was the agent at that point, once they got awarded to you, were they still giving tours of the property to prospective buyers?
No. So no, they were not. And this rider was strictly coming from the attorney. The seller's agent was not showing the property after the offer was accepted. And I don't want to pry into what she may or may have thought on that of her opinion on that process. But, she seemed to be pretty happy with having accepted my offer.
Sure. So you're now in the due diligence process at this point. Was there anything that came up during the due diligence that maybe kind of, you had to deal with?
Yeah, so there was when I when the property was listed, it had one tenant. It was the other three units were vacant, and the one tenant was what they call a legacy tenant, and it was a couple that was friends of the owner, and they paid about $500 a month in rent, and the market rent for a one bedroom apartment in Lowell is right around 1,200, which is what I'm getting for the other one bedrooms, and and they were in the, what I would consider the owner's unit. It's bigger, it's nicer. So that was one of the things that was a little tricky. They, I had to decide what I was going to do with that basically. And I forget where it came out, but basically they didn't, one of the contingencies from the seller was that we couldn't evict them. Like, right. They wouldn't deliver them, the property fully vacant. They wanted that couple to stay there as they were friends of the family. So I basically just had to kind of decide what I wanted to do with them. And I had allowed them to stay, but they ended up moving on their own. They had another opportunity that they decided to move in with a friend. And so it kind of solved itself.
So during the due diligence, nothing really came up. I mean, this is a pretty old property, right?
Yeah, 1900.
The foundation was fine. There's nothing wrong with the piping or electrical or anything like that.
Wow. So the property had, it had new vinyl siding, new vinyl replacement windows. The electrical had all been updated in the last 30 years. The plumbing had all been updated in the last 20, 30 years. The bones were great, and really it was just dated units. The appearance of the units is old. It was old before I got my hands on it, and that wasn't something that scared me. I know how to deal with that type of stuff.
Sure. So talk to us about what you did for the renovations.
Okay, so for renovations, I did pretty much everything aside from the roofing myself. I put in new floors in the bathrooms and the kitchens, and I put in new vanities in the bathrooms. Let's see. I put new flooring in pretty much the entire unit, replaced ceiling tiles. There was another unit that had original hardwood floors, so I had them refinished. Did some new light fixtures, stuff like that. And, they're not high-end units. They're not meant to be high-end units. They look nice though, for the price point I'm hitting it, it's a good, healthy, happy, comfortable place to live.
That's cool. And how long did it take you to do those renovations?
So I put in a lot of hours. I work a regular 9-to-5 type job. I'm an electrician, so I'm working 40 to 50 hours a week on that myself. And then I basically just did nothing other than work and sleep for the first 4 weeks. And I, within a month of purchasing the property, I'd done, a pretty minor renovation, if you even want to call it a renovation, but a pretty, I did it in about 3 or 4 weeks, and I had leases signed by the end of that. And I basically just put in, 40, 50 hours a week of my spare time, and got it done myself. I hope to not have to do that again, but.
Well, let's talk a little bit about the financing on this deal, because I think a lot of people that are listening are probably going to be thinking, well, if this is your first deal, obviously it's going to be, might be a little more challenging to find a bank to sign off on this type of debt on the property. So what did you do from a lender standpoint in trying to finance this project?
Nothing special. It was a 4-family. It was a residential owner occupied mortgage. they do look at your future rental income when calculating your debt to income ratio, which is the only reason I could afford the place. Everyone my age I don't want to say everybody, but a lot of people my age look at home ownership as like an intangible thing. Housing markets skyrocketing and all that. And if it wasn't multifamily, like I couldn't have afforded anything in this price range. But the fact that I had that future rental income calculated in, that allowed me to like meet the income requirements and my debt to income ratio to work for this property.
Now, before we got started, and I had to call it green room, if you will, we kind of talked a little bit about some of the numbers on this property, and you were able to do a refinance after you spent the time renovating and leasing it up. You spent the $20,000 on renovations. You're able to do the refinance, pulled out 40, so you're able to basically net 20,000. What did you do on the initial debt? Was it a bridge type loan that you did, or was it still just a 5-year, balloon with like a 30-year or 25-year amortization?
The initial mortgage I got was a standard 30-year residential owner occupied mortgage. It was not bridge or anything like that. I could have wrote out that loan for the next 30 years. And, what I did instead was I did it 4 months later, which actually was probably the hardest part of the whole thing, is that they don't really like when you do that. They want to hang on to that. And, the way the Fannie and Freddie standards are, they actually like require that if the bank is going to sell the loan to Fannie and Freddie. So I had to, I called like 10 banks and all of them said no. And I finally called this one other bank and they're like, they agreed to take it as a portfolio loan. So they kept the bank in house and therefore they can choose whether or not they refinance within that 6-month period. I had the property reappraised. I went through this new bank, and it's an owner occupied 30-year mortgage.
What kind of down payment did you have to put on it?
So I put down 20% down payment on the initial mortgage. And, I was hoping to get by with less, as it was a first time home buyer. But, this property came up and it was kind of like a little bit outside of my budget, but we made it work. And I did end up putting the 20% down in order to make it work. But when I refinanced, I had the 20% equity built in it, more than 20% equity. So they did it at a 80% loan to value and gave me the cash out that was above and beyond that. Wow.
Well, that's exciting to kind of see. And we had a guest on a couple of episodes ago that talked about that same process where he basically got turned down by multiple banks, but he just kept going on and kept on searching and eventually found a bank that was agreeable to the solution. And I think that's exactly what you did there too.
Yeah, absolutely. I think anything within, I'm sure there's a limit to it, but if someone says no, it's because they can't do it, not because nobody will do it.
Yeah. So on this particular project, a lot of times we talk about how many investors did you have and how did you raise the capital? It's really just one investor yourself, and you brought all the capital for this one, correct?
Yeah.
Yeah. So let's talk about the nice thing about this house hack. So this is the first episode of our podcast where we've actually had somebody actually house hacking an actual multifamily property. And so you've done this one very well. You acquired this property, spent $20,000 on renovations, was able to refinance it. You leased up the property. You're occupying one of them. So with that 75% of people actually paying the mortgage, how much are you actually netting yourself and take home? So you're obviously living for free, so you could probably add that back in. So let's just say add on another $1,200 for your rent where you would have had to pay somewhere else, and what you're making now on it.
Yeah. So, I mean, the way so right now the 3 occupied units, they bring in $3,500 a month in rent. I'm paying out about $2,150 a month in my mortgage and insurance and taxes. So I'm netting, $1,350 a month cash on the property, and that's not looking at, my expenses, which is what I'm, for the most part, I'm paying all my expenses through that cash. But, in addition to that, I do live for free. So, if you want it, I could rent that unit out and not live there, and, then it'd be, double that. So, it works out pretty well. And, I guess I do want to, I do want to talk about real quick is like when one issue I ran into when I was purchasing this property, and I forgot to mention it earlier, is when I had the appraiser come through, he appraised the rental value of the units as they stood at $800 a month. And so that was a little tricky because we'd been looking at a slightly higher monthly rental value on those units. And after I got in there, and I didn't spend a lot of money in each unit. I would have liked to have done more, but I just didn't have the money. But, I had these units that were appraised at $800 a month, rented out at $1,200 a month. And, I've got 2 at $1,200 and 1 at $1,100, which is a significantly smaller unit. And, it didn't take a lot to make that, to bridge that gap, I had no shortage of, I had no issue with placing tenants in that. I had way more than enough people that were showing interest to place exactly who I wanted. And, people ask me all the time, like, how is it living? How is it living at the same place as your tenants are? And I'm like, it's great. I brag about my tenants. They're great.
So what's your plan for this property long term? Because obviously the other factor that we didn't really calculate into what you're making off of it is the debt pay down and the mortgage pay down. So you're having
Absolutely.
built-in equity happening every single month as well. So what's your ultimate goal with this property?
I mean, my ultimate goal with this property is to hang on to it. I'm going to live in it I'm going to live in it for now. And I don't know, I don't have an exact plan for when I'll leave, but, I'm single. I have no kids, and obviously somewhere down the line, I'd like to purchase, a single family house that I'll live in, but I'll probably house hack a few more before I get to that point.
So the plan here is to look for the next one. So do you have that next one in sight yet?
Yes, I do actually. So I'm actually under contract with the next property. It is like half a mile away from where I live right now. It's another 4-family. It is like a way different beast than the one I'm currently in, though. It is the one I occupy is 4-bedroom, 4-bathroom. And, the one that I'm purchasing is 16-bedroom, 6-bathroom, 4-family. So it's 2 5-bedroom, 2-bathroom units, and then two 3-bedroom, 1-bathroom units. So it's a lot bigger.
And where did you find that one?
Where did I find that one? So that one I found off market. It is currently owned by Lowell Housing Authority. So it's a HUD property that's being used as public housing. And I basically, I go to the real estate investor groups in the area, and at one of the groups, I heard some representatives from Lowell Housing Authority speak about how they're going to sell their scattered site properties, is what they called them. They've got a bunch of large, 50 to 100 unit buildings, but they've also got a bunch of these smaller scattered multifamily buildings that they're selling. And so I got put on an email list. Nobody used any realtors, so they were never listed publicly. It was just anybody that had been added to this list. And I went to go to the showings. They released them in groups. And when I showed up to the showing, I was the only one there. No one else had inquired about it. And, I've got, what is, in my opinion, a pretty killer deal. Luck plays into it, but, I put in the time and the work to be there, when opportunity knocked.
So I got 2 final questions for you as we wrap up the episode. First question is, what did you find that throughout the entire process of acquiring 19th Street that was kind of easy, that maybe originally you thought was going to be a little bit more challenging?
Okay, so for me, the easiest part about 19th Street that I thought was going to be hard was placing tenants. Um, so I bought the property when it was delivered to me. It was delivered fully vacant, and so I had this like brief moment of panic, like what if no one wants to live here? Like what have I got myself into? And you know what? When I listed the 3 units I had in Lowell, I had under $1,300 a month. I had 3 out of the 6 available units. The vacancy rates are very low here. And I had, in a matter of weeks, I had over 200 requests for showings on those units. And, if I didn't have a good system already set up to deal with that, it would have been overwhelming. But, I was ready and prepared to screen tenants. And that was the easiest part of it was placing tenants. And I was very nervous about that from the start.
Did you ever have the thought that because of how easy it was to lease it up, that maybe your rate was still just a little bit too low?
So yes, that definitely crossed my mind. If I were to do it again, I think that might have been the thing that I would change is I would list them a little higher. It's hard to tell, based on what I had observed in other listings, in higher price range. Once you stepped up into the $1,400 price range, it seemed like everybody had granite countertops and all that stuff. And I most certainly do not have granite countertops in there. So, I felt confident about my price point. Moving in, I might, next time I have a vacancy, I will probably test the waters a little bit higher and see what I get. But, at the end of the day, I'd rather have a large tenant pool to pick my choice from at a slightly lower price point than I would, absolutely maxing out and having, to pick between 2 people.
Mm-hmm. Yeah, another strategy that you could also use is instead of listing all of the vacant units, say you had those 3 of the 4 that you wanted to lease up, instead of listing all 3 of them at the same price, you can put them at different price intervals and see what each one of these intervals are that people are wanting to go at. Because it also creates a little bit of, if they think that their neighbor is paying $1,400 a month and they're going to get it for $1,300 or whatever, it can create some, it creates the ability to be able to show some difference in the price difference in the different units. And it also provides them a kind of a psychological advantage of thinking that they're getting a similar unit, but at a better price.
Yeah. Yeah. That's a good idea, Dan.
Yeah. One of the last questions that I have here for you is kind of contrasting that. What did you find that was harder than expected during the entire process that maybe originally you thought was going to be pretty easy?
All right. So trying to do everything myself, just because I'm capable of it all, doesn't mean that I'm the one that should be doing it. On 2 fronts. One, it was very mentally taxing to go through and put in that many hours. I did so because money was the deciding factor on it, and I decided to do it myself instead of pay someone to do it. But some of the stuff probably would have gotten done quicker and at a slightly higher quality had I paid someone to do it. I think that was probably the biggest thing was my time management.
Well, Forrest, I want to thank you so much for taking some time to be with us here today on the podcast. How can the listeners reach out to you if they want to start to follow you more, or maybe reach out to you to ask you some more questions on this particular acquisition?
Yeah, so they can reach me through Facebook or Instagram, Lennhoff Properties. That's spelled Lennhoff Properties. They can also check out my website, which is lennhoffproperties.com.
Great. Well, I really appreciate that, Forrest, and look forward to having you on a future episode as you continue to close more deals.